So I'm going to be going through where you can find opportunities and one specific set of opportunities that I think are quite underrated. And for me, that is cyclical companies at the bottom of their cycle. Now, that's obviously really easy to say, right? Just buy at the bottom. But what I mean by this is you can tell this is when prices have dropped significantly. Large amounts of these companies have become unprofitable, and they're sustaining and they're carrying losses. Their inventory that they're selling has decreased in value significantly. This can apply to all sorts of industries. It can apply to oil, gas, daily charter rates for tanker businesses, microplastic, sort of polysilica businesses. It can apply to miners. It can apply to gold, lots of various lithium, lots of various commodities, copper, and so forth. And if you can then, during these sort of bottoms, if you can find businesses which, yes, they may be taking losses, even if for the next 1 or 2 years, but with the strongest balance sheet or with the lowest cost producer, and they're set up in a position to actually benefit from such a crash and such weakness because the rest of the competition out there is struggling and they're in a strong position to sort of benefit from this. I think that's a really good position to be in, considering that there's only so long that the competition can sustain losses before they're going to have to rationalise or bring down capacity, and as a result, supply demand sort of rebalances, and before you know it, 2 years later, that's sort of how the market sort of turns around. So if you can just pick out the best 1 or 2 players in that market at a very discounted valuation, which is either the lowest cost producer or has the best balance sheet by far, so they have very little interest, particularly when interest rates are rising. So their operating costs are very low, they've got a long runway ahead. I don't see why you wouldn't be very well positioned going forward in the next 1 or 2 years in these types of companies. Now, I think currently in 2025, I think it's the polysilica type businesses which are sort of going through this recessionary period, although it's more artificial in China. I'm not going to go too far into that, but that's perhaps something worth checking out. I know, for example, the tanker business during COVID was horrible. So did the oil business, and you can see. I mean, a lot of these commodity type businesses, but these businesses in particular were hit hard, particularly as the value of oil for the first time ever was actually negative for a short period of time. And I mean, if you've just seen how well they've done since, and don't get me wrong, there's been quite a few things which have worked out in their favour on top of that, but there's definitely opportunity there. And I think it can be a legitimate business way to invest, where you just go through sort of cyclical industries and just buy in at the when it's the most sought to buy in, when the company's losing money, but you can see that historically they've actually been profitable, low cost producer, strong balance sheet, and so forth. That the smart capital allocators. I don't see a reason that would stop me buying in such a situation. Yes, even if I had to sustain losses as a shareholder for the next 1 or 2 years, I still think it's worth it for me. And chances are you'll be able to get the business really cheap, trading at almost net cash in some of these instances, or near net cash, perhaps it's half net cash or something like that. So it can work, in my opinion. That's all. Thank you for listening. And I do think it is something worth exploring. Thanks.